Good afternoon. Today we have with us Faisal Hasan, Chief Investment Officer and Head of Asset Management at Almal Capital. Welcome, Faisal.
Thank you very much. Good to be on your show.
So, Faisal, given the slew of events lined up on the global fronts and the rising geopolitical tensions in the region, what would your asset allocation strategies be?
I think more than yes, geopolitics always plays a big role in the sort of overall macroeconomic conditions of the region and its effect on the energy markets. But overall, our strategic asset allocation more or less remains the same. Yes, it is more dependent on what the macro indicators are, especially when we are looking at the interest rate movements, whether the Fed will cut or when it will cut. And this is getting more sort of delayed as we see from the Fed meetings. So we are still looking at asset allocation, which is much more diversified. Yes, on the fixed income side, because fixed income is now actually giving a good yield. So we are more into the fixed income side so that you can lock in the yields. On the international allocation, we are more sort of bullish on the emerging market, hard currency bonds, because we feel that emerging markets might cut the rates sooner. On the equity side, yes, on the global level, yes, we are still positive US, but within the region, I think we are looking at more of the dividend yielding, sort of stable financial stocks, and there are certain themes that we can play out which are going on in the region.
How should investors go about their stock selection strategy in the medium term?
I think in the medium term, I think the discipline is very important. So once the asset allocation and you look at the risk-adjusted return of each asset class, and then allocate it according to your requirement. But overall, yes, there are certain themes on the equity side that can be played out. For example, in the region, tourism is a big theme, healthcare is a big theme, and you can look at the dividend yields. Some of the many stocks are giving a very good dividend yield, which because investors in the region always like yield, whether we are looking at the real estate, they are looking at income generating, whether they're in fixed income, they are looking at, and then in the equities, they are looking at a good dividend yield play. So there are various themes that can be put in place to create some kind of a stock allocation matrix.
From a current valuation standpoint, how are you reading the Middle East market?
From the valuation perspective, I think we have to look at the earnings. The earnings growth has been good, especially if we were a bit concerned about the real estate sector. But if we look at the earnings that has come in from the big real estate players, they have really outperformed the estimates. So we are seeing the earnings growth is good. And there are other factors that are attracting the institutional and international investors. One is the foreign ownership limit. So foreign ownership limits are getting increased, and the free float of the companies are increasing, which means institutional investors can look at the stocks. And the most important part is the countries, especially from Saudi Arabian perspective, the increased allocation in the MENA indices, in the emerging market indices, which is FTSE and MSCI, that is attracting much more passive and active funds internationally. So all these are having an effect on overall the market performance. And yes, in some cases, it will always be like that the valuations might look tight in certain sectors and the valuation might look attractive, but then you can play around. And I think still, I think there are pockets where we see the stocks with the sort of undervalued stocks, which can be taken up by the investors.
How are you playing the current market momentum? Like, do you think, are there any kind of interesting bottom-up opportunities?
Usually we take the top-down approach, but yes, in case it's like a bad quarter for a good company is always good for us. And we are always keeping in mind some of the plays that we are not able to enter because their valuation looks a bit frothy. So we look at those individual plays. We don't like to comment on the individual names, but yes, there are names in the, as I said, in the tourism sector, because especially in the region, tourism is a big play, and any stock which is sort of related to the tourism, that has a very good potential, because the kind of events that are supposed to be happening, especially in Saudi Arabia and UAE, we have seen it in Qatar as well and other GCC countries as well. So tourism related sectors, stocks looks to be good, but we'll have to see each stock on its own merit.
Are there any concerns or challenges that investors should keep wary about in the medium term?
Look, in terms of, yes, geopolitics, in case there is a cascading effect or there is a increase in geopolitical tensions in the region, that always affects overall the foreign fund flows into the region, and investors like to stay on the sidelines. And we still feel there is some dry powder which is staying on the sideline because they are worried about the geopolitical situation. But more importantly, as to what the interest rate movement and what are the, because we are pegged to the GCC region is pegged to the US dollar with the exception of Kuwait.
Yes.
And any movement in dollar, any movement in the Fed interest rates, how the Fed reacts, will have a direct bearing on the markets here. And we are sort of a high beta market, so any effect which have a high sort of effect in our markets. So how the interest rates movement, that is one area that I'm a bit concerned of, because if you look at in US, we were all expecting a recession for last, I think, 18 months, and it has not happened. And how Fed is going to react in terms of cutting the rates, whether they cut 3 times this year or probably lesser, how that sort of differential between the Fed and the market perception, that is one area that we'll be looking at.
And since you mentioned there's a lot of dry powder sitting on the side, when do you see that dry powder, or when do you expect that to come back into the market?
I think once we see a clarity on how the interest rate movements is going to be, what is the Fed saying about the interest rate cuts, and once the first cut happens, which probably in our view will be in the second half of the year, then we will see much more clarity on the interest rate movement, and then it might attract some of the dry powder back into the markets. But then we also have to see how the other asset classes are looking like, because now much of the dry powder is going toward the private asset classes. We are talking about the private equity, venture capital, private credit is a important thing that we are seeing from the investor. They are very much interested in the region.
Are there any particular region that investors should be favoring under current circumstances?
Look, from our point of view, yes, we are sort of very positive on UAE and Saudi Arabia in the region, because of the fact that the kind of growth that we are seeing in those markets. IPOs are a big sort of reason that investors are looking at, the kind of returns that are coming in the IPO, the kind of market depth that is increasing, and the themes that are there to play, whether it's real estate or financial services or tourism or healthcare. So we are sort of overweight in terms of Saudi Arabia and UAE in the region.
Which are the underlying domestic themes that you are extremely bullish on and you believe that will do better in the longer term?
At the risk of repeating, I think tourism will be big, because I think tourism, the kind of projects that are happening, the kind of events that are going to happen in the next decade or so, and the kind of openings, whether we talk about the golden visa in UAE, whether we're talking about the events that are going to happen in Saudi Arabia, the kind of events that it has won, that is going to have a lot of effect, and that will be a big theme that investors can play. Right now, we are underweight banks, because we think once the interest rates cut or the clarity interest rate comes, then probably we might be more neutral or overweight on the banking sector.
Thank you so much, Faisal, for your time. It was a pleasure talking to you.